Today, I'm proud to say that under the UK's presidency, the group of the world's 7 most advanced economies, the G7, is launching a set of public policy principles for retail central bank digital currencies, CBDCs. Central bank digital currencies could be a digital version of money, a bit like a digital banknote that could be used alongside physical notes and coins.
So, what are these changes really about? The proposed changes will mean you will no longer have complete control over your spending. In fact, what they are planning is a replacement of money with something fundamentally different. Therefore, is not just cash that they want to remove from the economy. It is money itself. Pay attention, because if the new monetary system is allowed to happen, it will be significantly challenging to reverse and could mark the beginning of the end of human freedom. In order to explain the changes that are being planned right now for you tomorrow, let's explain how money works today. Let's imagine Jack wants to buy his son a birthday present from Lidl. He chooses the product he wants and then pays £100 for it using his debit card. Now, you may think that this £100 is immediately transferred from Jack's bank account to Lidl's bank account. However, this is not what happens. A record is created showing that Jack's bank owes Lidl's bank £100, and Jack's account will even show that £100 left his account. But the actual transfer of funds does not occur during the time of purchase. Jack's £100 purchase is one of the millions of transactions in the UK that occurs every day. Although the account shows that money has been transferred, the actual movement of funds between the banks only happens once per day. Every 24 hours, all the payments made through and from each of the UK's 300-plus registered banks are added to determine how much each bank owes the others. The Bank of England, which is the central bank that all of the systems are connected with, calculates the total amount each bank owes and is owed for that day. The Bank of England then intermediates and exchanges funds between all the other banks. So the Bank of England does not know anything about Jack or the £100 that he spent on his son. Jack's money is just a tiny part of the vast transfer of funds. That means the only organization that can see what Jack does with his money is his bank. The central bank cannot see what he spends his money on or when he spends it. Moreover, Jack's bank is obliged not to share his information with anyone. This means that there is a significant degree of anonymity about what Jack spends his money on. And rightfully so. But this means that government or central authority such as the Bank of England cannot directly restrict Jack when he uses his debit card because it has no visibility of what Jack is doing with his money. If Jack pays for a present with £100 in cash, the purchase would be completely anonymous. Nobody, including Jack's bank, would know what he spent his money on. Therefore, cash transactions are fully anonymous, and debit transactions have a significant degree of anonymity because only your bank can know about them. So, what is this new system? The new system's name is Central Bank Digital Currency, or CBDC. Sometimes it has other names, such as smart money. Here is how it works. Let us imagine again that Jack wants to buy his son a birthday present from Lidl. His mobile phone has a smart money wallet or app on it, from which he pays £100 for the product. The app communicates directly with the Central Bank of England, and the money is transferred from his digital wallet to Lidl's digital wallet in less than a second. The transfer of funds occurs at the time of the purchase, and the transaction is recorded and approved by the centralized computer system on a centralized blockchain. A blockchain is a special computer program that records information extremely accurately and cannot be amended. The centralized computer system runs constantly and can process hundreds of transactions per second as they occur throughout the entire economy, thus processing all of the public purchases made by millions of digital wallets. This sounds fantastic and is much easier and quicker than the old system. However, there is a fundamental difference, which is that all transactions are centralized in real time as they happen. In other words, one system will be able to know about every single digital transaction in the economy as the transactions occur. This is the fundamental difference with the new digital monetary system that everyone must be aware of. All transactions are centralized in real time as they happen. The people who are planning this new system are made it clear that it would be useful in their eyes to use artificial intelligence algorithms in real time to block certain public transactions for various reasons. So, what does this mean for Jack? Let's imagine a scenario where the world is in another lockdown, and the government wants to stop the public from moving around the country. With this new system, the government can introduce a simple change. That would mean that Jack's wallet would only work if he were located within a specific distance from his own home. Little as 2 miles from his home, and he decided to go and buy his son a birthday present. He attempts to pay £100 for the product with the app. The app communicates directly with the Bank of England's computer system, and the system rejects Jack's payment before it is made. Because the system knows that Jack is 2 miles away from his home and Jack's wallet has been limited to spending within just 1 mile, Jack cannot now buy anything unless he moves closer to his own home. His money is now useless if he wants to go anywhere. You may be asking now, why Jack just don't use cash? Well, that would be a good solution for Jack, as long as cash is still in use. So, how may this new system be introduced? Media will flood the news with all the negative consequences of inflation, high interest rates, and house repossessions that occurred. A bank could freeze cash withdrawals using the current economic situation as an excuse, and some of the banks could actually go bankrupt. Thus, wipe out all their customers' deposits. A similar happened in the crypto world with Celsius and FTX. At that point, central banks will then use the media to present a novel solution for the monetary system called central bank digital currency, with a promise of a significant way towards recovery of the economy from recession. Furthermore, customers will be able to swap their traditional money, which is, at this point, unobtainable due to a massive freeze of cash withdrawals, for the new digital currency CBDC. Nevertheless, once again, a body in power will lie to your fucking face. Therefore, history will repeat itself.